In this track and trade trading training video, I want to talk to you about the bulls and bears when we go through what we call a very narrow sideways market, or what we end up getting with a bunch of whipsaw. Whipsaw is what we call it, where the market begins to rally, but then it doesn't, and then it begins to drop, and then it doesn't, and then it begins to rally again, and then it doesn't. It just goes sideways. Now, it's easy for me to show you a nice, big, long, beautiful uptrend with a beautiful arrow at the bottom of it, saying, oh, look how wonderful the bulls and bears is. Didn't we make a lot of money when this thing rallied just perfectly? It's easy for me to show you lots of examples of that. But that's discounting the fact that markets have a tendency to go sideways more often than they actually trend. So how do we get through a market that's going sideways without losing all of our money before we can get to one of those big, long, beautiful trends? Now, you know the saying, and we always say it, and you've heard me say it a dozen times, cut your losses short, let your winners run. Well, what do we do in a scenario like this where the market just goes sideways for a long time? How do we handle this so that we don't lose a whole bunch of money, so that when we do get to a nice big long trend, it can pay back the small losers and still give us some profits? That's the name of the game. Now, trading is just like playing a game of checkers. Now, in checkers, you don't win every single move, right? You know that you're going to lose some moves in checkers. Well, in trading, it's the same way. When we trade, we're going to lose some trades. We're not going to win every one. We can't. But we have to be there so that we know when a market's going to get ready to rally and go, and we want to be there so that if it does take off, we can be there to take advantage of the nice big long run. So that means we have to take every single signal. If we're going to be a trader, we watch and pick our markets, and then we have to take every single signal that's given to us. Otherwise, we're going to miss out on the one that pays back all the losers. So we want to be very careful, though, when we take these trades, that we don't risk a whole bunch of money. We want to risk a very small amount of money. So we're going to come in here. Let's go through this sideways market now. I've showed you some beautiful trades in the past videos of how we get in when the market's trending nicely. Let's go through a nice, narrow, sideways market and see how we can get out to the other end without losing a whole bunch of money. Okay, we know we're not going to make anything through here, right? I mean, I'm being up front and I'm showing you this is ugly, but we have to be able to trade through this thing so that we can get to the nice big long trade, because we don't know when that nice big long trade is going to come along. It could be any one of these signals, but we have to be prepared and ready to get to it. So let's come through and run a scenario where this thing is going to really rip our wheels off, but see if we can keep it from losing all of our wheels. So let's go through, and we're going to come in here. Now we got our buy signal. This is a yellow followed by a green, and it's a bullish buy signal. Very nice buy signal. Notice that it closed higher than it opened, and it closed higher than yesterday's high. And so that's a very nice bullish buy signal. We could just go in with a market order if we wanted to, because this is such a bullish buy signal. But I like to use stop orders to get into these markets. So let's use a stop, and we're just going to place a stop above that green price bar. So if it continues higher, we're going to get in, and we're going to buy 3 contracts. It's very bullish. And a lot of people ask me, well, Len, how do you know whether you should get in with 1 contract or 3 contracts? If I get a really bullish buy signal like this one, where it closed higher than it opened, and it closed higher than yesterday's close, and it even closed higher than yesterday's high, that's very bullish for me. So that means I want to go ahead and I'll risk more contracts. It gives me a better feeling of knowing that this is more bullish. And now you'll notice that if this is a bearish buy signal, I can still use a stop. I can still get into the market if it continues to rise, but I won't get in with as many contracts. So here's an example where we've got a very bullish buy signal. We're going to put in 3 contracts, and we're going to come in, and this is where we have to protect ourselves. Okay, so we're going to go ahead and confirm that, and we're going to step the market forward. We got filled. Now, it's not a very strong signal. Notice it didn't go up. It didn't really jump up like we anticipated with such a strong buy signal. But nonetheless, it got us into the market. It's still green. Now we have to protect ourselves. So what are we going to do? We're going to come in here, and we're going to put a sell stop of all 3 contracts behind the previous price bar. We're going to go ahead and confirm that. And now we're going to set ourselves up just like we did in our advanced strategy in the previous videos. We're going to come in here, and we're going to say, okay, let's turn on the parabolic SAR down here, and let's go ahead and also go to the bulls and bears, and let's turn on both sides of the blue light system, and we're going to wait for this thing. We're going to step it forward, step it forward. Oh, nice advance. We're going to come in here. Let me turn off some text here so we can see a little bit better, and sell 3 contracts. Maybe at this point I want to even start considering breaking them apart, but I'm going to hold on one more day. Oh, look what happened. A bearish buy signal or a bearish green signal. It closed lower than it opened. It closed lower than yesterday's close. It closed the same as yesterday's close. So we're going to sit on this and wait. And we're going to say, okay, what's going on here? I don't like this. Step the market forward. It's going sideways again. It's not doing anything good for us. Okay, now that's a nice move. Now I could consider breaking these things apart. Maybe I'll come in here and I'll edit this order, and I'm going to put we're going to sell one right where we're at the behind the previous price bar, entry price bars level, which is almost at the blue light system. So I'm going to come in here. I got that one set to 1. I'll go ahead and I'm going to place another stop. I'm going to place this one. Let's go ahead and set one more here to trail on the blue light system. We're going to confirm that one. And we're going to go in and we're going to do another one right at the same spot, just like we did before. And we're going to sell one on the parabolic SAR if it catches up to us. Right? Remember, we're going to wait till it catches up. Now notice how they're all on top of each other. It's kind of hard to read. All we have to do to fix that is we just enlarge the chart. We just blow it up. Okay? And now we're just kind of got a very close-in view of what's going on. Now we step the market forward. Oh, and that thing's coming back against us. The blue light system is now trailing. We have one stop set right behind the previous price bar. We have the other one set. Oh, this one's a trailing, so it's saying, are you sure you want to move this? I'm going to say yes. I'm going to move it still. I want it to be right behind the previous price bar. And I'm going to make that one trailing back to the PSAR again. So now we're going to step forward. And as that market moves in our favor, the blue light is continuing to move forward just like before. And we can step this forward one more time. And if that red light would catch up to us, it would start trailing as well. But look what's happening. The market's starting to come back against us. This is not good. Notice that we now have a blue light above because we put on both. We have a blue light above. We haven't been stopped out yet. Oh, we just got stopped out. One of our contracts, the one that was falling on the blue light system, just got stopped out. And it's gone. The market's gone yellow. Step forward. This is not good. Now, again, if this market starts to rally, we could even come in here and prepare for the market to rally and get back in. So we can come in and we say buy one, trailing stop based on the blue light system, confirm, and in case that thing rallies, we'll get back in with that other position. But it didn't. It took us all the way out. But notice how we were protecting our capital and taking very small losses on each one of these trades. So now we're going to come in here. We're going to go delete. We delete that order. And notice how we were taking very small losses. So now we can come back in and we can scale this thing back down to where we were. And we can start to move it forward again and watch this market. Yellow, yellow, yellow. And of course the bulls and bears now keeps us out. We've gone yellow 3, 4, 5 days, a week, 2 weeks now. And it's just keeping us out of the market. It's saying, look, this market's not going anywhere. So don't try and trade it. You don't know. There's no reason to get into this market. Oh, now it's saying, okay, now it's giving us an indication that this market's going to start to drop. Well, we can go short in the Forex market just as easily as we can go long. So we're going to come in here and we can stretch this out just a little bit more. We're going to come in here. We're going to place our order. Sell. Let's go ahead. Now, how strong is this order? It's a bearish buy signal, which is what we want. We want a bearish buy signal. Or excuse me, not a bearish buy signal, but a bearish sell signal. Bearish sell. Those two things go together. We want to sell. We want it to be bearish. It closed lower than it opened, and it closed lower than yesterday's close, but it did not close lower than yesterday's low. So it's not a real strong sell signal. So let's only go in with one contract, and we can add on if it continues to drop. So we're going to go in here with one contract, and maybe we'll go in with two, because it's not completely, it's not a bullish sell signal. It's still a bearish sell signal. It's just not an extremely bearish sell signal. So let's go in with two contracts. Let's confirm that. We're going to step the market forward, and we're filled. Nice fill. We're going to come in, and we're going to place it behind the previous price bar to buy our two back. Now we're going to confirm that, and we're going to step the market forward, and we got stopped out immediately. So we've taken another loss. Okay, we've taken another small loss. But it's been a small loss. Now, $4,700, that seems like a lot of money, but we're trading a full-size account. If we were in a mini account, that would be $472. So realize the difference in the leverage and what we're doing here. This is a full-size account, and we're taking very small losses as far as a full-size account is concerned. So as this market now moves back against us again, oh, yellow, yellow, now it's gone red again. Well, that's another sell signal. Well, let's go ahead and take advantage of it. Let's put our order in here. Now this is a pretty good sell signal. It closed lower than the previous price bars, low, close, and lower than the previous. So this is a nice bearish sell signal. So let's go ahead with all three contracts, confirm that one. We're going to step into the market, and the market came back against us. Now because we used a stop order instead of a market order, we didn't get in. So we have no risk. The market came back against us. We didn't get in, so we didn't get in. So let's just go ahead. It's still red, but it's a bullish sell signal, which we don't like. We don't like bullish sell signals at all. But it's still a sell signal nonetheless. It's still a red sell signal. So let's just leave our order where it's at. If we wanted to, we could even suck it up a little bit right here and say, well, maybe if it comes down, we'll get in. Now it's gone yellow. It's completely yellow. So what we do is we come in and we just go ahead and we delete the order. Now we're going to step the market forward. Yellow, 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 yellow. We do nothing. We sit on the sidelines. We don't trade this. We're out of the market. Yellow, 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 yellow. And so this is how we go through this whole process, and we start it all over once again, protecting ourselves so that we take very small losses so that when this market does finally rally, we're there. We're in the market, we're prepared, and we're ready to go. This is a bullish buy signal. It closed higher than it closed. It closed higher than it opened. It closed higher than yesterday's close, and it closed higher than yesterday's high. So this one would be very bullish. We'd be very optimistic on this one, that this might be the one that's going to take off to the moon. We'd probably enter with 3 contracts. But again, we'd protect ourselves so that if we're wrong, we get out with a very small loss.